Stop loss. Should you be using a stop loss in a crash like this? This is being made during a live show. Consider liking and subscribing to my channel. But we're just a few moments before the bell goes and people are talking about setting stop losses. Let me talk about it and explain why I never do it and why it's a bad idea. First of all, I only ever buy companies. I don't buy stocks. I buy companies or indexes of companies, the S&P 500, of course, of great businesses that I can own forever. Stocks go up, stocks go down, but the business I own, and the reason why I own them, is I believe they're going up and they're going to continue to go up into the future. That's what an investor does. However, if you are afraid you start putting in stop losses, that protects you from greater losses. Kind of makes sense at first until it doesn't. Let me explain. First of all, stocks are not businesses. Businesses are all doing well. 75% of the stocks that I own this year in the S&P 500 beat on earnings. Inflation is coming down. Things are moving in the right direction. The economy, from the standpoint of an investor, is good. I'm bullish. My engine is good. My income, you've got to have income to be able to invest. My income is increasing and growing. My portfolio is increasing and growing. But in between, we have these moments where the market gets jittery. I predicted this. This is no surprise. Even though I'm fully in with margin, I couldn't be further in with margin, quite frankly. I'm still extremely bullish, and I predicted today before the show went live. In fact, this show was called Crash and Boom over the weekend ahead of time. So I was prepared for the market to go down today. Well, should I set a stop loss then? And should I be able to, then I could buy back more when it goes down? The fact of the matter is, no one knows the bottom and no one knows the top. I only know what I need to know, and that's the quality of businesses that I own and where they're going up in the future when I need the money. I don't need the money today. What I do on red days is buy. Now, the reason why I don't like stop losses is if we look at that chart right now, a very basic line chart on Robinhood, it looks like it's down today. It is down today. Of course, it's amplified down because I'm doubly down, like I'm doubly up because I'm in margin. Makes perfect sense. However, that is not what's actually happening on the stock market. Not even close. What's actually happening on the stock market is it's going up and down really, really quickly like that. Micro trades, millions of trades a second. Algorithms, people far more advanced with far more greater technology are trading in and out of this quicker than you'll ever be able to do that as a retail investor. You do not have the ability, the information, the technology, and so on to compete against the market. So why try? When you try, you always lose. It's why people say, why did a stock go down when the earnings was good? Or why did a stock go up when the earnings was bad? And so on and so forth. Well, there's a lot more to the market than appears on your app on Robinhood or any other brokerage for that matter. The fact of the matter is there are millions of trades happening all the time. And that is where we are overall over a certain period of time. It's moving up, moving down. But nevertheless, there's a lot more going on behind the scenes. Now, if you set a stop trail loss, remember you can only do that during a main trading day. Stop orders, you can set those pre-market and after-market, of course, not over the weekend. You can't do that. And that's important to note as well. But if you set a stop order to sell at a certain level, what that basically is saying is you don't believe in your businesses, really, because you have to separate the fact that business is not a stock. Even though that's how we buy it, it's not a stock. The stock is purely a popularity contest at that moment. It's a sentiment, and right now it's before the bell goes, and we've got some big data coming out today. The market is selling off before it goes back, but it's selling off a lot more than you can see because it's going up and down very, very quickly. So let's say I set a stop order to protect me from losing more money. What happens is all of a sudden you get stopped out. You're out. Just before it bounces back, you're out because it flashed down really, really quickly. It sold out. It got rid of all the weak hands, all the retail investors that use stop orders. It got them all out. Wall Street then bought the bottom of that, and it goes straight back up again. How many of you have got stopped out and then a few hours later go, oh my God, now it's up? Now what are you doing? Now you're chasing it going up. You're always going to lose if you try and compete with the stock market. So you don't. You don't do that. You own the businesses, not the stocks. It's a really, really bad idea. It also shows weakness that you don't understand what you own. If you'd bought a business at a fair price because you recognize the balance sheet, the profit, the loss, you also recognize what the FOMC are doing, you also recognize where interest rates are going, you are very confident with your investment, then stand by your conviction. If you didn't believe in it, hence why you've set a stop loss, why did you buy it? Simple, isn't it? You didn't understand what you bought, you were gambling, and now because you don't like the way it's gambling, you've put a safety net in place. Well, that safety net is just going to cost you money 9 times out of 10. Remember, just because you can trade doesn't mean you should trade. The only winners every single time are those that own the casino. Own the casino, don't play the casino. In this case, the casino is the brokerage. When you trade, Robinhood, for example, make money. They don't care whether you're up, down, left or right. Every time you trade, they make micro trades with payment to order flow, bulk buying of stocks with the market maker. They make money. Even though it seems free, they make more money. You, however, get stopped out and now you're chasing the market once again. I don't believe in stop orders. Stop orders are designed for people who simply do not understand their positions. Now, you might say to me, yeah, but if I'm up 30% and I set it at, 28%, so I'm guaranteed 28%, and then it goes down, and then I can buy it back, I can make more money. You're absolutely right. Absolutely right. However, that's a very simple way of putting it. You don't know what the bottom is. The point is now you're guessing where the bottom is and you're buying it back at some point. You may end up paying a lot more than you did originally. Does that really matter in the long swing of things? I guess it doesn't. If you keep making money on each trade, it doesn't really matter. You're always going to pay more in the future for a stock than it was 10 years ago. But at the end of the day, you are taking greater risk by trying to chase the stock. Buy the business and then hold it. What you are looking to do, if you are an investor, is buy more when it goes down. Because don't forget, if you also sell with a stop order, you've now got to pay, presumably on your brokerage, you've got to pay 20% tax on it as well. So 20% of your money that you've made is gone as well. So 9 times out of 10, stop orders are not really that helpful. I don't believe in them. I don't do them. I am prepared for a market crash. I can always buy more. Even though I'm very heavily in margin, I'm always buying businesses that I can own. I'm not concerned. This dip like this is normal. It's expected. I predicted it. I even named the title of the video, Crash and Boom today. I was ready for this. The amount I got on margin is allowing for this. That's risk management, discipline, structure. I can allow it to go down. Is it going to go down 20, 30% today? No, it's not. Well, what if it did go down 20, 30%? Would I get margin called? No, I wouldn't. I absolutely wouldn't. Would I buy more? Yes, I would. At the end of the day, no one knows when the bottom's going to come. No one knows when the top's going to come. No one ever knows. But if you put automatic safety nets in place, it takes it away from you using your mind and discipline and puts it in the hands of the computer who's just going to emotionless, and there's nothing wrong with that, of course, emotionless, do what you ask it to do, and at the end of the day, it's not the best thing for you. It's only the best thing for the brokerage. I strongly suggest not doing stop orders. I think it's a really bad idea. Trailing orders is very different on a stock that you're just trading out of. You're not buying a business, you're buying a stock. If you are using a stop trail order to take profit on the way up of a stock that's exploding during a day, very different, because you're buying a stock that you don't believe in, you're only trading it, you're watching it go up, and all you're doing is trading it out. It's not an investment, it's a trade, it's a scalp trade. Very, very different. Now, if you've got just one scalp trade running and you're just watching one screen, one stock that you're trading, then you can do it manually. Never click sell, of course. You'll always lose like that. Always make sure you do a limit order. Otherwise, again, because the stock's moving so quickly, it won't always give you the best price. A stop trade order allows you to look away from the screen, knowing it's going to keep trading up, and at a certain point, it will sell and trigger, and you'll be out. That's very different because you don't believe in the business. You're just buying a momentum. You're just buying movement. That's very, very different than being an investor setting a stop loss. So that's my thought on that. I wish everyone the best. We're about to open the bell, so I'm going to go back to our live show. I wish you all the best. Be very, very careful. Buy businesses. Don't buy stocks. Know what you own. Always have discipline. Always have risk management in place. Always understand what you own. Take the emotion out of it, and the emotion will come out of it when you understand it. If you are fearful and you're setting safety nets in place, it's because you don't know what you own, and that will never work out well for you. Click above my head for all the links down below in the description. Tomorrow we've got a big event, Meet the CEO, live on the show. We've got Gorilla live on the show tomorrow. Over here is the event, and down here, something that I think that you'll like best. It's called Best for Viewer. Whatever you watch will appear down here, and it just picks out the things that you most likely want to look at. Anyway, until next time, as always, take care of yourselves.